If saving money was all it took to become wealthy, then the person who never buys coffee, never upgrades their phone, and keeps every dollar in a savings account would eventually become a millionaire. But that's not how wealth works. Because you can become incredibly good at saving money and still stay financially stuck for decades. And here's the uncomfortable truth. Saving money protects your wealth, but saving money alone usually doesn't create significant wealth. The difference is what you do with the money after you save it. Because there are two completely different financial games. One is about spending less. The other is about owning more. And if you only play the first game, you may never win the second. Most of us were taught the same basic money formula. Go to school, get a job, earn a paycheck, pay your bills, save whatever is left, and repeat. It sounds responsible. And honestly, saving money is important. You absolutely should have an emergency fund. You should avoid unnecessary debt. You should live below your means. But there is a problem when saving becomes the entire strategy. Because your income has a ceiling. Your ability to cut expenses also has a ceiling. There are only so many subscriptions you can cancel. Only so many restaurant meals you can skip. Only so many times you can tell yourself, I'll save more next month. Eventually, you hit a limit. You can't cut your way to unlimited wealth. But your income, your investments, your ownership, those can potentially grow far beyond your monthly paycheck, and that changes everything. Level 1, the math of saving. Let's make this simple. Imagine you earn $60,000 a year. After taxes and expenses, you're able to save $6,000 annually. That's actually pretty good. You're disciplined. You're living below your means. You're avoiding lifestyle inflation. But if your income stays around the same level, you're still working with a limited amount of money. Saving $6,000 a year is admirable, but $6,000 doesn't suddenly become $60,000 because you were disciplined. You need time, and you need growth. This is where investing becomes important, because when your money is invested in productive assets, your money can potentially generate additional money. Stocks can grow. Businesses can generate profits. Real estate can generate income and potentially appreciate. And over small periods, compound growth can become dramatically more powerful than simply accumulating cash. Think about the difference. If you save $500 every month, you're adding $500. But if that $500 is invested and earns returns over time, you're not just adding your own money anymore. Your previous money can start working alongside your new contributions. That's compounding. And compounding is one of the most important concepts in personal finance. But here's where things get interesting. Because even investing isn't the biggest difference between the average person and the wealthy. There's something even more important: ownership. Level 2, the wealthy think differently. Think about how most people make money. They trade their time for income. You work an hour, you get paid for that hour. You work another hour, you get paid again. That's earned income. And there's nothing wrong with it. In fact, your income is probably the foundation of your financial life. But your time is limited. You only have 24 hours in a day. You can't work 100 hours every day. So eventually, you need something that can grow without requiring you to personally exchange every additional hour for money. That's where ownership comes in. Imagine owning a small piece of a company. You aren't personally working every single hour inside that company. But if the business grows and becomes more valuable, your ownership can potentially become more valuable too. That's one reason stocks exist. When you buy shares of a public company, you're buying an ownership stake in that business. You're not simply putting money somewhere and hoping it magically increases. You're participating in the potential growth of an underlying asset. And this is one of the biggest mindset shifts in building wealth. Stop thinking only about how much you can save. Start thinking about what you can own. Level 3, the inflation problem. There's another reason saving cash alone can be a weak long-term wealth strategy: inflation. Let's say you have $20,000 sitting in cash. That $20,000 is still $20,000 on paper. But if prices rise over time, that money may buy less than it did years earlier. This doesn't mean keeping cash is bad. Cash is extremely useful. You need liquidity for emergencies, short-term goals, and unexpected expenses. The problem is assuming that cash alone is a complete wealth-building strategy. It isn't. Your emergency fund has a job. Your long-term investment portfolio has a different job. Confusing the two can cost you years of potential growth. Level 4. The real problem isn't saving. Now, let's be clear. This video is not saying stop saving money. That's terrible advice. Saving is the foundation. If you spend every dollar you make, you don't have capital to invest. If you're constantly using credit cards to cover your lifestyle, investing becomes much harder. If you don't have an emergency fund, one unexpected expense can destroy your progress. So yes, save money. But don't stop there. Think of saving as the first step, not the finish line. Saving creates the capital. Investing puts that capital to work. Ownership gives you exposure to economic growth, and increasing your income gives you more capital to deploy. That's the cycle. Earn more, spend intelligently, save the difference, invest consistently, own productive assets, then repeat it for years. Level 5. Why high income doesn't guarantee wealth. But there's another trap. Making more money doesn't automatically make you wealthy. You can earn $50,000 a year and spend $50,000. You can earn $100,000 and spend $100,000. You can earn $300,000 and still live paycheck to paycheck. Because wealth isn't simply about income. Income is what you earn. Wealth is what you keep and what you own. That's why lifestyle inflation can be so dangerous. You get a raise, your apartment gets nicer, your car gets more expensive, your vacations get bigger, your monthly payments increase, and suddenly your new six-figure income feels exactly like your old income. The number changed, but your financial position didn't change nearly as much. Instead of turning every raise into a higher lifestyle, imagine turning part of every raise into higher investments. Your income goes up, your lifestyle improves a little, but your ownership grows dramatically over time. That's a very different game. Level 6, the $10,000 decision. Let's say you suddenly have an extra $10,000. You have two very different choices. You could spend the entire amount on something that feels exciting today, a luxury purchase, a new car upgrade, an expensive vacation. Or you could use some or all of that money to strengthen your financial foundation and invest for the long term, depending on your goals and circumstances. The first choice gives you consumption. The second can potentially give you future options. And that's what wealth really buys you, not just expensive things, options. The ability to leave a job you hate, the ability to handle an emergency without panic, the ability to take a career risk, the ability to help your family, the ability to spend more of your life doing what you actually value. That's why the goal shouldn't simply be, how can I have more money? A better question is, how can I build enough assets that my money starts creating more options for me? Level 7, the wealth building ladder. So what should the strategy actually look like? Think of it like a ladder. Step 1, increase your income, build valuable skills, negotiate, change jobs when appropriate, start a side business, find ways to increase your earning power, because a bigger income gives you more financial fuel. Step 2, control your spending. Not because you need to live miserably, but because the gap between what you earn and what you spend becomes your investment capital. Step 3, build an emergency fund. Because investing money you might need next month isn't the same as investing long-term money. Step 4, eliminate expensive debt. High-interest debt can work against your wealth-building efforts. Step 5, invest consistently for the long term. For many people, diversified, low-cost investments, such as broad market index funds, can be one straightforward way to participate in the growth of the stock market. Step 6, focus on ownership. Stocks, businesses, real estate, or other productive assets appropriate for your situation. The exact mix depends on your goals, risk tolerance, timeline, and circumstances. But the principle remains. You don't build lasting wealth simply by accumulating dollars. You build it by accumulating productive assets. Level 8, the mindset shift. And this is the mindset shift most people miss. Poor financial thinking asks, what can I afford? Better financial thinking asks, what can I afford without damaging my future? The first question focuses on today. The second considers tomorrow. And eventually, the wealth-building question becomes, will this money create more value for me, or will it simply disappear? That's the difference between consumption and investment. And no, you don't need to stop enjoying your life. You don't need to become obsessed with every dollar. You don't need to live like a monk. You don't need to be afraid of spending money. The goal isn't to die with the biggest bank balance. The goal is to create a financial system that gives you freedom while you're still alive to enjoy it. So, will saving money make you rich? Saving money can absolutely help you build wealth, but saving alone probably isn't enough, because there is a massive difference between having money and having money that works. The person who saves $10,000 has $10,000. The person who saves, invests, and continues contributing over decades may eventually have something much more powerful, a growing asset base. And once you understand that, you stop asking, how can I save another $50? And you start asking, how can I make my next $50 work for me? That question can completely change the way you think about money, because the ultimate goal isn't simply to become better at saving, it's to become better at building. Building income, building assets, building ownership, and eventually building freedom. If this video changed the way you think about money, don't just watch the next one. Start applying one idea from this video today. And if you want more videos that break down the psychology and strategies behind building real wealth, subscribe to the channel. Because in the next video, we're going even deeper into the money mindset that separates people who simply earn money from people who actually build wealth. Subscribe, and I'll see you in the next one.